G'day traders, we're going to wrap up of the markets for Thursday the 17th of October. So as you can see from today, a very one-sided day, very much a day where the buyers really took control and took it up all day long. Here's the 15-minute chart. Obviously we've finished the trading day now, but just to talk about where the market's at from a slightly longer term perspective, what are the significant support and resistance areas. It's very important that you mark in support and resistance. And support and resistance is these horizontal lines that mark significant prices or significant areas within the market. And what a significant area is, it's just an area that the market respects, at least three times. So if you look at this line here, for example, the market's come up. We certainly wouldn't have had this line in here yet, but it's a quite a visible top, and the market's come up. It's if you look a bit closer, it's got through it, bounced off it, come back, bounced off it again. So it's sort of touched it once, twice, three times, four times, a fifth time here. And you can see the market sort of coming from underneath it, coming from above it. So if it comes from both sides, even better. But what you want to see is just a significant area, an area where you can see if you just a line doesn't have to be perfect either, doesn't have to be perfectly matched up from the touches. Just so you can see where an area has come and respected a particular price in the market multiple times. So that's a support and resistance. So it's very important to have those in place. So as we started today, we're going to draw in this particular line here, and I'll make reference to it as we move over to 1 minute chart. You can see, we've been in a bit of a range here, and all of a sudden, they've popped up and broken the highs, got above it, they've got a little bit below it. This is quite a significant area, and what we're watching as we open up the market, we talked all about, okay, what does it want to do around this area here? We're opening up around this. If it sort of finds resistance and starts pushing lower, maybe we want to go lower. If we get above it, that's a real sign that they're going to consolidate this push up, and the first move area they want to move to is sort of the top of the markets, and then they want to break higher, which is obviously what they've done now that we can see the market in hindsight. So let's have a look at these 1 minute charts. So here's that line I'm talking about. So we opened up this pre-market, okay, and basically the market's just gone higher and higher. It's got straight out of this pre-market area and just headed to the upside. It's come back straight away and tried to test this support and resistance. So this nearly lined up with the power point. The power point would have been sitting down here, so not a bad area. We've got a power point lining up with the support and resistance area. We've got the market pushing through, getting above it, so there's momentum and direction to the upside. What happens, markets logically, they go through an area, they come back, test it, and usually bounce off it again. And what you can do then to really confirm the area is look at the other markets and see what are they doing. So this particular case, you look across the left-hand side here, the Russell was having a little bit of a pullback, nothing too major. The flip side of that, it was the Nasdaq. It was having quite a decent little pullback here, a little bit more sellers than we sort of would like to see. So that's something certainly to be cautious of and wary of. But overall, not a bad little buying area because we got momentum direction above. Come back, tested this area, which really should hold if the buyers are in control. And from previous days, we can see it's more a buyer's market than seller market, that's for sure. From here, we've just sort of headed up, and as you've seen in other videos, what we do is we mark the 10 o'clock, significant high point, and what we want is it to come up, make a significant high point, and come back at least 3 points. So even though we've had little pullbacks here, it's nothing significant. Really, the market's just pushing its way higher and higher and higher. It's just one of those rare days, maybe once or twice a month, that you'll get this sort of day where it just, there's no decent sort of pullback, and we just watch the market go up all day long, basically. Some people might have specific little finer tuned systems, how to take advantage of these markets, but typically what we're looking for is a decent pullback, come back and then get momentum and direction back to the highs, and we look for power fades back to the highs, or look for a pullback and to hold and back to the highs. So what that means is we need slight changes in direction, or what we call pullbacks, and give us an opportunity to get into the trade, into the market. If the market's just going up like this, it looks all well and good in that there's lots of points or ticks to be made there, but the fact is, where do you get in? Where do you get in systematically to a procedure or to a method? Okay, the fact is, you need pullbacks to be able to do that. You could say, yeah, well, just get in anywhere here, but if you had got in here, for example, the market's pulled back, a decent little sort of 6-7 ticks there would have stopped you out. So it's very hard. You don't want to enter at the highs. You want decent pullbacks, and that's the best place to be looking to take a trading opportunity. So it's funny these sort of days. It's a lot of movement all in one direction. Doesn't necessarily mean it's the best trading day as far as opportunities. The best trading days is when there's multiple trends, sort of decent pullbacks, and that's where we really find our opportunities in the trading room. So from there, let me just sort of go through market. You can see it sort of topped out around about just after lunchtime. We normally trade through to about here. Just as it's starting to get a little bit of pullback, and sort of go through the rest of the day. Here's an example for me. If we really want to sort of look at an area, we want it to come back and then look at, say, something like this, a power fade to the upside to get a continuation of the trend. But that's very late in the day. We're finishing the trading room by then. So, as far as today is concerned, very important to keep in mind support and resistance areas, have them marked, and let them be the guidance as far as where you believe the market's going to go. We talked about this line. If we sort of get momentum and direction above it, that's a sign that buyers were going to be around, and that's exactly what happened. They got through it, they bounced off it, from there they went high. If for some reason in the market at some stage pulls back, which it didn't today, but a lot of days it will, and looks to come back within the range, and as it comes back and heads back towards this area, it's an area to be very wary and cautious of. But if you saw momentum and direction starting to turn and sort of come down and popped up and then sort of headed down again, this is very much an attraction or an area that the market's going to look to head towards. If you saw some pressure from the other markets and everything start to push down, then you look for trading opportunities to head towards this area and be getting in and out, certainly before it hits and potentially gets a bounce again at this area. But that's all in hindsight, and that's all sort of something that didn't happen on this particular day, but that's the sort of thing we're talking about and going through and sort of analysing it and waiting for as we proceed through the markets. Just so happened this particular day, just all one direction, sort of one of the days where we just really had to sit on our hands, but still there's lots to be learned, no doubt about that. So that's a wrap up for Thursday, and we do these wrap ups Monday through Thursday, so we'll be back again on Monday.